How's it going, everyone? My name is Nick, and today we're going to be talking about investing. So when it comes to investing, a lot of younger adults and millennials have no idea where to start. And it's really a shame because investing works the best if you're starting earlier in your life, because you can build up that compounded interest over your entire lifetime to gain basically free money. So as I said, we're going to be talking about why it's best to start young investing, how you can actually start investing, and how easy it is to start investing. And we'll actually be going over a case study. We're going to be using the popular app Acorns to just show how you can get started and how you can build your wealth early and young. And just as a reminder before I go on, I am in no way, shape, or form a finance expert. I'm just a normal person, and I'm giving you my views on how I invest and how I believe everyone else should be able to invest, not really knowing much about finance. So you don't really need to be an expert to be able to make smart, informed decisions of what to do with your money, which is a great thing. So let's just go over some types of investments you can actually make. As everyone knows, there's the stock market, and that's what we'll be talking about today. But there are other things such as real estate, investing in other people's ideas and their companies to see growth and hope that you can invest that way and that your return on your investment will come. And then there's also education. Everyone kind of doesn't consider this a lot of the time, but investing in yourself, being able to learn new things, could bring you more money in the future. So I definitely count that as a form of an investment for yourself. So you heard me mention compounded interest, and that is the reason why it is better to start investing early. I'll just give you a quick example. I'm gonna go on to this compound interest calculator right now. So say you had an initial principal, so you had an initial amount of money, let's say it was $5,000. And every year after this year, you will add another $5,000 to this investment. Let's just pretend you're investing in some mutual funds and you're just investing into a bunch of different stocks throughout the stock market. And usually that interest will grow at a rate of about 7%. Over the lifetime of that investment. So we're just going to say 7% interest on your investment. Let's put it into the calculator real quick. So current principal 5,000, annual addition 5,000 per year, and I'm going to put years to grow 40. I'm 23 right now, so in 40 years I'll be 63, and we'll see how much money I would have just doing 5,000 a year from now till I'm 63 at 7% interest rate. All right, so the future value of my $5,000 with an additional $5,000 annually invested comes out to be $1.142 million. That's right, $1 million. And that's starting out with $5,000 and only adding $5,000 a year until I'm 63. So you can see right there why it is really important to start early and start often investing. So I know what some of you are thinking. You might be saying, but Nick, the stock market doesn't always go up 7% annually. And I would definitely agree with you. But I read a stat the other day in a news article, and over the history of the United States stock market, the price has never been negative over any one 20-year period. So let's take 2000 to 2020, for example. Within that time period, no negative returns. You will always gain a positive return. And that's historic, right? So it could change in the future, but in my opinion, if you see that long of a time period with negative percentages in the stock market, there's probably more going on in the world that you have to be worrying about than your investments. So yeah, generally the stock market goes up, and generally you will get a lot better return than just having your money in a high yield savings account. Although I do recommend the high yield savings accounts. They're usually around 2%. They've been a bit lower this year, they've been going down, but 1.7 to 2% is a great interest rate if you have a chunk of money that you don't really want to risk in an investment and you want to have to, say, as an emergency fund or something like that. So throw it into savings. But yeah, so we will now go see the app Acorns, and I'll show you how you can actually start. All right, so we're gonna log into Acorns now, and it'll bring up my account information and my account balance. So you can see I have $3,642 currently in my account. And I just wanted to mention right off the bat that this is not an ad for Acorns. As you can see, definitely don't get enough views to make this an ad. So I'm just showing you how I got started in investing and how a bunch of other people have done this as well. So Acorns is definitely an easy app for you to use and learn how to invest. So this app is an investing and savings app. Its main purpose and the way it was advertised is to actually help you save money on Roundups, Acorns calls it. So let me just show you guys here. We're gonna go to Invest for Your Future, and we see there's this little Roundups button here. So we're gonna click Roundups, and we can actually see the amount of Roundups that I have invested. So what a Roundup is, say I go to a coffee shop, I spend $4.50 on a cup of coffee. Acorns will then round that $4.50 up to $5. So it's gonna take that 50 cents that it rounded up and automatically invest it in this account. So I actually started using this account as a savings tool because I really wasn't saving enough and I wanted to just kind of increase my savings without even thinking about it. So every single transaction I take, and you can see, Spider Kelly's, Uber, a bunch of restaurants, Wawa, everything in here I actually have rounding up. So every time I swipe that card, I'm actually investing, which is a really cool feature, and I think it's something that everyone should start doing now because it takes the thinking out of it. It does it automatically for you. Now I'm going to go into another feature of Acorns, which is actually recurring investments. So you can see here right in the middle of the screen, I have $10 every Monday being invested into this account. So every 4 weeks, that's $40 into this account. Comes right out of my bank account, automatically invested. And you can actually see I have my roundup settings to automatic at 2 times. So it'll actually take that roundup and multiply it by 2, then invest it. So if I have 50 cents rounded up that was gonna be invested, it'll multiply it by 2 and make it $1. Now, the one thing I want to mention, and this is probably one of the most important things for those of you that don't really know what investing is or haven't invested before, is the portfolio. So sure, I'm putting all my money into this account, but how is it actually being invested? What am I putting my money into to try to gain more money? So I'm gonna actually click this portfolio, and I'm on the aggressive portfolio. I recommend everyone to do the aggressive portfolio, especially at a younger age. And in reality, Acorns' aggressive portfolio isn't that aggressive. You can definitely get way more aggressive with your investing. So you can see here, there's a little pie graph of where your investments are actually going. So you can see US real estate stocks, international large company stocks, US large company stocks, and they're basically all stocks. So this aggressive account has a bunch of stocks. And if we actually go and click on these stocks, so I'm in the large company stocks right now, 40% of all my money invested into Acorns is going to go towards this Vanguard S&P 500 ETF. And an ETF is an exchange traded fund. And basically what this ETF is following the top 500 or the S&P 500 index and how it's actually going with the market. So you can see featured holdings of this Vanguard S&P 500 ETF are Apple, Microsoft, Google, Amazon, JP Morgan. You get the idea, and you can go through for every one of these different investment portfolios and see what your money is actually being invested in. So that is a pretty cool feature. And just to give a little bit of a background on ETFs, you can get a bunch of different ETFs. They're just funds that are exchanged on the stock market, but they could represent many things. So I like going with the broad index funds, which represent a lot of different individual stocks. So it automatically diversifies your portfolio, it lessens your risk a little bit, and it generally just follows how the stock market is doing at that certain time. It's a great way to not really have to think about your investments, but you're still making good decisions that aren't really risky, but still have the potential to make you a lot of money. So as we close out of that, I'll actually go into my performance real quick. This is the last thing that I will show you in Acorns. And you can see all time, it says I've gained $525, which is 11.37%. We're in a really good stock market right now, and it's just been going up and up. I don't expect it to be like that for much longer, but it's been great. And I'll actually show you to my past year, because you can see on this graph, I actually withdrew some money at some point, then put money back in. That's really not how you want to do it. You want to keep your money in here, keep investing so it can grow, as you see. So we will go to 1 year, and my 1 year gain is $484, which is really good, 15% as you can see. And it's just been going up and up and up and up. So I started beginning of the year at about $1,800, and through my investments and just putting more money into this account, plus the stock market going up, I ended with $3,642. And that's a really good gain for just not even thinking about investing. All right, so that was Acorns. You could see how easy it was. Their interface is really good too, just to navigate and go through and see what's going on with their application. I know I just touched the surface with a bunch of the stuff I was talking about, the stock market, different portfolios you could take, but Acorns makes it really easy if you don't really want to think about those type of things. So I definitely recommend it if you have no investments at all. Now, I definitely also recommend that Acorns not be your only investment account. You should definitely have savings accounts, high interest savings accounts, retirement accounts, and other investment accounts that you use. So that's all I have for today. Remember, start investing early and start investing often. Those are the two pieces of advice I bring to you if you have not been investing already. Remember to go down if you like this video, click that like button, click that subscribe button. I'm really trying to get the channel to grow, and those little things help immensely. Even just write a comment, anything you'd like. I'm gonna respond to every single comment. So yeah, have a good day, everybody.